It's Monday, January 24th. It is oil in Asia rising quite strongly at the open, up well above $88, nearly knocking on the door of $89. It seems only a matter of moments or hours or who knows till we break the big 9-0. It seems nothing much stopping it. Let's kick off with Omar Najia, Global Head of Derivatives of BB Energy. Omar, your thoughts this Monday morning, a weekend in which there was lots of saber rattling about situation in Ukraine. At the same token, a very tight oil market, global oil inventories well below 5-year averages, OPEC, not even making up its 400 barrels a day increase, etc. Tight market, geopolitics, we're heading to 90.
Yeah, I think that's true. So I think short-term market goes up. I don't know. I think we're looking basically for a top. I think we're going to get this, last euphoric stage. We had a big correction on WTI from 85.41 down to 62.40. And now we took out the old high and we're searching for a top. Where that top comes, I don't know, but I would definitely expect it to come soon meaning end of Q1, middle of Q2, start of Q2, something like that. And then we correct whatever people say about stocks and geopolitics and all the rest of it. So a while back I was saying that Iran and the Iran deal will happen. And I think on Friday you saw that the Europeans starting to say, yeah, the Iran deal will happen. And will happen not because Iran gives an inch, but because the US and the Europeans give everything. Because basically they're, quite categorically not only in the wrong, but they got nothing else to do. You can't sanction Iran because they're selling all their oil to China. What are you going to do? So, I think basically markets are looking for a top. Whether that top is, whether that top is 90 Brent or higher. I think that, for the next, between now and let's say March, end of March, something like that, I think the market's going to be strong. I don't think the Russians will invade Ukraine. I don't think they want to. And it would be very stupid for them to do. They can take out anything to do with Ukraine in a split second with the missiles that they have. They can destroy the Ukrainian army, in a matter of days, I think. They don't need to invade. They don't need to put boots on the ground. So I think that's a kind of a red herring, but keeps the market kind of frothy. What if? And sanctions against Russia doesn't happen.
Sanctions against Russia. Neil Atkinson, former head of Oil Markets Division, International Energy Agency. I suspect, Neil, throughout your years at the IEA, you've seen a few crises, both supply and geopolitical. How do you rate this one? And with the sort of recovery in the oil market, the oil price on Brent, since the big crash at the end of November and now in the new year, we're seeing a real surge. Where do you think the push upwards is coming from, fundamentals or from geopolitics, or where would you put the weighting in those two?
Well, it's both. One of the fears that we had just a few weeks ago now is what was going to be the impact of the Omicron variant. It was feared that it could be very severe and it would lead to further lockdown measures, further restrictions on mobility, further restrictions on activity, lower oil demand. At a time when, on the other side of the balance, supply was likely to increase. Now, it appears that Omicron has not been as severe as we first feared, and so the fears of disruption to the economy have eased to some extent. So the focus is now switching to the apparently ever-rising Russian threat to Ukraine, and whether you believe that Russia will invade Ukraine or not, and there are differing views about that, the tension itself is enough to cause upward momentum to prices, because there are potential consequences. Maybe there will be sanctions against Russia. And if there are to be sanctions against Russia, the only sanctions that would really bite would be with regard to energy. And that would mean a further restriction in supply, and thus justifying some of the upward price momentum. So, what's the weighting between the two factors, the easing of the demand fears and the rising of the geopolitical tension? You pay your money, you take your choice. I don't know. But
does oil win either way, do you think? From a
what do you mean by oil win?
I mean, in terms of price point, in the sense that prices on oil will go up, whether it's conflict in Ukraine, obviously supply concerns. If there isn't, then there's a sense that the demand recovery continues and the economic growth for 22 looks bedded in.
It's difficult to see if there is to be a breakout from where we currently are. There is difficult to see anything other than moving further upwards. That's certainly true. It's very hard to see what would happen to cause prices to fall significantly in the near future.
Let's welcome Richard Radoglia, CEO of Matrix Global Holdings in California. Richard, good morning. No shortage of Happy New Year as well. Not only good morning and good night, because where you're sitting, it's dark outside as compared to bright. The sun's beaming through my windows here. But Happy New Year, Richard. Clearly, US are caught in the middle of this one and a few other things. What's your outlook at the moment? Oil markets, as we talked, knocking on the door of $89. Where do you see the fundamentals at the moment and OPEC Plus's role in that?
I think we've been talking about this for the last 6 months, if not a year. I mean, I think we have as you've watched, I'm not sure, or you didn't watch the 2-hour Biden press conference, which was a kind of the ramblings of an old man in my mind, who really had no really way to express and project power and project force and trying to say what we're going to do. I think what we've seen here, and this continues to be, is OPEC Plus. It's a new world. I think we're seeing something we've never experienced. I talked to Neil about this earlier. Watched this market for decades now, and I don't think we've been in a situation where you have this combination of a market that's finding tighter supply, rising demand with tighter supply, with the marginal barrel starting to get squeezed, with government policies that are pushed to the green side. So we're not seeing the normal reaction, which is super majors looking for more oil in every direction. They're not. So I think we're in a situation where probably the greatest risk to the downside is a collapse in equities. The question about a collapse in equities is, what's the real effect on demand? And what is the effect on demand if OPEC Plus wants to tweak the dial back a little bit? We've seen their ability to hold the dial. And I think a combination of Russia and OPEC Plus having the effect, if the equities do decide to take a correction, because we're seeing a correction in multiple markets, will that cause the price to trade down? I think Omar made a good point. We're probably seeking a high price here. We'll get people long. It'll have another correction. The concern, I think, is not now. Really, my concern would be, what's this market going to look like at the end of 22, when the marginal barrel when there's even less marginal supply available.
Richard, I know you wanted to show a graph. I don't know if you want to do it now
sure. Let's show it now. I think people will find this very interesting. Look at the three circles here, everybody. These are the last 3 price spikes. You can see the price spikes, and corresponding to those price spikes is the 1 to 12 month Brent curve. So it's obvious the difference between price of where it is now and where it was in 08 is $42. The price kind of where it was in the 12 to 14 area is $30. But note, the backwardation is greater now than then. Why is that? I always want to ask the question, when you look at charts like this, you have to ask yourself, why? And I think what we're seeing is something, and the really big why is OPEC Plus is in control. There's no marginal supply coming online. The super majors are not there to add the extra barrel. And green policies, I believe, have disconnected from reality. And so to me, this is a very telling chart. Not only do we have a lot of room to run on price, but you can see the breakout that we can see on the 1 to 12 month spread. We are heading, and very close to, except for a small blip in 2014, we are heading to all-time highs in backwardation, which in my mind is always a good example of people's view of where the market is going.
We did have Jorge Montague on yesterday calling $100 triple-digit market soon enough. Omar, to bring you in on this, the sort of underpinning Richard's highlighting there of the OPEC Plus in the driver's seat. I welcome your thoughts on, I mean, what might be some of the challenges to this market as all of these issues intersect. So Ukraine, Russia intersecting with OPEC Plus and where can OPEC Plus ultimately survive? I know you're saying you don't think the Russians will go into Ukraine, but let's sort of read all the tea leaves a little bit differently. Pointing many indicators are they will. The US announced overnight for all non-essential staff to leave Ukraine and so forth. Could OPEC Plus, this Russian-Saudi alliance, survive the kind of onslaught of further sanctions and whatever reaction the West could deliver? You're on mute, Omar. Sorry.
So yeah, if I needed to answer that question, it would be yes. I think survives. So basically, OPEC Plus is there because the West in general has said that we want green policies. And, the green policies are totally disconnected from reality. And in order to achieve those, you need massively high oil prices. Because, green has massive problems. So in a word, yes, if you want to sanction Russia, what can you do? You've already sanctioned Russia. Europe sanctioned Russia. The US has sanctioned Russia. The only thing that they could do is basically stop them from accessing SWIFT. So take their banks out of or try to remove their banks from the global economy. But then, the Russians already have an alternative. They're turning more and more to China and to Asia. They don't need Europe. And then Europe gets I don't know what percentage, 30, 35% of their gas. What are they going to pay with if they can't use SWIFT? I mean, it's completely...
But let's just to stay sort of closer to the question. We're talking about an OPEC Plus alliance between Russia, Saudi, and essentially the UAE, but many other partners there, but ultimately those three big actors. In a post kind of Ukraine-Russia war, clearly this is it would appear to me you're either with us or against us moment. How can the two biggest US allies in the oil world, Saudi and the UAE, stick with an entity that the West and the US is at war, or some kind of significant paradigm shift with? It seems to me a challenge there. Neil, welcome your thoughts on that. OPEC Plus survive what let's assume is a classic war in Eastern Europe.
Well, OPEC Plus, let's just go back through history briefly to OPEC. I mean, OPEC itself has survived wars between its own members, Iran and Iraq for a start, the Iraqi invasion of Kuwait, in various other disputes, the ongoing tension between Saudi Arabia and Iran, now at various times in its history. And somehow or other, the organization has continued to work and continued to make supply agreements. So I don't think that that we would necessarily be seeing the death knell of a formal OPEC Plus alliance. It's still within everybody's interest within the alliance to keep it going for as long as possible. Of course, if there were to be some kind of diplomatic pressure, say from the United States, although it's hard to believe that the United States could add anything else as stupid as that to the list of mistakes they've made, then maybe we would see a change. But I don't think the OPEC Plus alliance necessarily is central in the middle of this drama.
Well, you do have a lot of crossovering alliances here. I mean, Richard, your thoughts on the question. Ultimately, do we connect dots here, or are all of these dots stand alone? The Iran nuclear talks have nothing to do with Ukraine, Russia. The China, Russia, Iran war games in the Indian Ocean just around the corner from us here has nothing to do with the Iran nuclear talks. Do all these dots coexist in separate universes, or is a moment like Ukraine one in which they could possibly all collide? Your thoughts?
Yeah, it's sitting here in California, just speculating on a world stage. It'd be Richard Radoli speaking. I'm not sure it would matter it matters one whit.
Well, you've got some sense of where the U.S. government is,
I think
what their willingness would be to connect dots.
I think, to me, it is the collective insanity of what we're seeing. It is the U.S. and Exxon saying, I'm going to be I'm going to be carbon neutral. It is our government stopping the Keystone pipeline and asking OPEC to produce more oil. It is on and on and on. It's the marginal barrel at the end of the day. Are there going to be enough barrels to supply the market? That has been what we've looked at our entire lives. It's always been something. You bring in the North Sea, you bring on the North Slope, you bring on Brazil, you bring in the Permian, you bring something in. Now banks won't lend to major oil companies to go drill for oil. We're $2 trillion less in searching for oil since 2016 or 17, some huge number. Isn't that what we're talking about? So all of these little pieces, I think, are just little pieces in the puzzle. And ultimately, if you take out Russia, well, there's 2 million barrels of Urals that's not going anywhere. So to me, I think it's this collective disconnect that someone's going to, someone with a green in their green policy act is going to get hit by a 2x4 across the head and say, gee, I didn't really think that would happen. As we know, I think Neil would probably know if he read it, and my guess in the papers in Europe, nuclear and natural gas is now green. Well, my guess is one day crude's going to be green again too, because it's the only way to stop the prices from going way above $100.
Yeah, and you're making a very good point there. I mean, this energy crisis, however you define it, is going to, I think, challenge what we might call the green agenda. I took 4 flights last week for the first time in 2 years. I actually went outside of France. Who knew? And I gave a presentation in Sweden, which had the title, After COP26, Back to the Real World. And the real world of ever rising energy demand for fossil fuels as well as other sources, against the fact that we have seen this collapse in investment over the last few years, as Richard just said, is going to come and bite us in the pretty near future. And we're already seeing, because we've recovered faster from the pandemic than some people thought we might, we're seeing the resumption of demand pressures. We're seeing very tight supply growth in the next few years, the erosion of the OPEC plus spare capacity cushion as they increase their production gradually. And unless we get more investment, and that investment has to happen now, we are faced in a situation where the prices could rocket. And, I'm with Richard on this the whole way. I mean, there is a lot of
I don't want to get too distracted by kind of beat up on the green agenda. I mean, ultimately...
Oh, come on, we all enjoy it.
The reality is, of course, that the Permian is at near record production. The opportunity for companies or countries to offer, forget about the US being green or being misguided in its policies. There's many countries in the world that could offer much better terms to international oil companies that they have failed to do so and failed to attract that investment. So there's many reasons why new capacity is weakening. But Omar, I'd like you to just give us your thoughts on the intersection. We're talking about dot connecting. Richard started out our conversation a bit about the equity markets having a turnover moment. There's certainly the outlook there not so positive. Your crypto looking like it's having a hard week. Where do you see these sort of, what has been a sentiment all boat rising market is now one where it's starting to fracture and not all boats are rising? Where's the intersection connection on that for you going forward?
I mean, sure, yeah, that's actually what's happening. You're getting a base disconnect. So you either treat each market separately, and you can then look at fundamentals and say, we've got like 3 crude cargoes here and 1 there, and 2 sellers and half a buyer, and all this kind of stuff, and then we got Russia, and then equity markets are tumbling, blah blah blah. But I think I look at the markets a little bit differently. So all of them together, all of them in terms of sentiment. So basically, how are people actually feeling? Are they greedy? Are they fearful? What are they doing? So that's market psychology is what drives the markets, right? So you got the US and government action and all the rest of it. So you got markets that are literally delusional, right? Across the board. You've got a government in the US, which is the leader of the West, which is totally delusional. There's no other word, delusional. Green policy, which is delusional. So you got that on one side. So basically, that's why we're seeing prices of everything skyrocket, because delusional policies mean that you print money and you don't get inflation and everything's going to be all right. And if there's any problem, we'll just print more, right? So that's the state of affairs. And you will get basically times at which people will be fearful and they will say, well, we've come a long way and this is it and we've got to sell, and they will sell and markets will come down. Then everybody goes like, oh my God, it's the end of the world and what are we going to do, et cetera, et cetera, et cetera. But it never is. It never is, and it never will be. So the point is it a good time to buy oil? The answer is yes. Is it a good time to buy equities? The answer is yes. Is it a good time to buy Bitcoin? The answer is yes. Is it a good time to hold the US dollar? The answer is no. Is it a good time to be the US hegemon in the world stage? The answer is definitely not. So,
so you're saying there's no sentiment shift, basically, from what has been essentially buy, all boat rising, that train continues?
No, I think basically there is that you're trying to engineer a sentiment shift. In other words, you've had the Fed come and say that we want to cut rates. Then you have basically, if you look at the actual data,
raise rates.
Raise rates. If you look at the actual data, every time the Fed has raised rates, the actual S&P, or if you look at the broader market of the US, if you add them all together, I think maybe the Russell is a good example, you will see that they actually go up, not come down. But you see in the press that Fed rate rises will cause market crash. So you have all these stories in the press basically that are trying to massage this market this way or that way. I don't know what it is. Maybe it's basically get people to sell before you kind of reflate for the midterms and start to kind of excite people, because Biden has very little else. So politics are a huge, massive, enormous driver of markets, and ignoring them, sticking your head in the sand, saying, the US doesn't matter, Biden doesn't matter, Russia doesn't matter, blah, 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 I think is a mistake. I think let's
go to the survey question and to get the room's view on this sort of theme we've been discussing this morning. Can OPEC Plus survive Russia invasion of Ukraine, i.e. the alliance between the leading members of OPEC Plus finding themselves on the other side of this standoff, perhaps? We saw the US reaching out to Qatar the last few days to deliver gas to Europe at what might be a fracture in the gas supply from Russia. Perhaps, they ultimately would this be a seminal moment of significant geopolitical shift, and not just a kind of Crimea comes and goes, but this could be something much more substantial. Neil, I welcome your thoughts the week that's in it. We do have the first Fed meeting of the year this week, and the Canadian Central Bank as well. Does monetary policy, do the signals and the action moving forward by the central bankers sort of dictate the direction of travel here, do you think? Obviously geopolitics on one side, but also the monetary policy strategy moving forward.
Well, they signal rate rises. They're meeting. Inflation, the rate of inflation is increasing. There's little sign that it'll top out and start to ease back just yet. So it would appear consistent for them to announce a rate increase. But if they do, we're not talking some enormous jump. It's not as if everybody's going to be defaulting on their mortgages overnight. It will be, if there is one, it will be very small, and indeed, as will all the others which are likely to follow during 2022. Gradual, steady as it goes.
Richard, your thoughts on that? I mean, sitting in California, I'm sure gasoline prices at your local pump are nice and chunky. What of the different factors that the policymakers are facing? Obviously, they got to, in some ways, choose between inflation, higher rates, equity markets getting impacted by an aggressive tightening cycle. Which one of these do they choose? What do you expect?
Well, I think it's a good question. And I live in San Diego, California. I think it's the highest gasoline prices in the entire country, $4.89 for regular gasoline.
Wow.
It's and we have rent prices up 25 to 30%. We have housing prices, which are a good thing, have gone up, but who knows what will happen if interest rates go up. So there is this kind of collective malaise you're starting to feel now. The feeling is one of hopelessness. Hopelessness is the wrong word.
I mean, it's a strange moment in America, because I know you're articulating a criticism of Biden, but ultimately you are also in a time when you've got very low unemployment, you've got more jobs than there are people looking for jobs. I mean, the macro picture, the recovery has been, from general sort of macro analysis, very positive, but the sentiment seems to be still depressed.
We're tired of wearing masks. And I think, to me, it is not so much an economic, to me, it's almost a sense of loss of freedom and this feeling of, I don't get to do what I want. I'm going to walk into a store. And I've made the choice. I've been double vaccinated and I've had COVID. I walk into stores and I don't wear a mask anymore, and I don't care. And I think there's this collective feeling that we've lost freedom. America is, in my mind, has been somewhere that you do what you want to do and you try to get ahead. And we've lost it. And I think that feeling of having someone always tell you what to do and what to think and what to feel and that you're wrong. You're not allowed to express an opinion anymore. I have friends now, I wouldn't dare talk about energy policy with them anymore at all. It's just something that I don't even discuss. I don't talk about the vaccine because they are concerned about it. When people shy away from you, they move, it causes unease. And I think it's that unease. But I think that
in a way is putting aside the phrase, but is trumping the positive economic narrative.
I believe so. I believe that's it. But people see what's coming. They're paying $5 a gallon for gasoline. And I know, and Omar, I don't necessarily agree with what Omar said about everything is rising. I believe that what we're seeing in energy, and this, I don't keep on dating myself, this goes back decades. I do not believe we have seen something like this in energy before. We have always had self-correcting mechanisms in the energy market. You said, Sean, someone else can make a better deal for oil companies. They can't. JP Morgan is not going to lend the money to them. Citibank is not going to lend the money to them. The banks aren't going to give them the money. Full stop. That's what they say. We're not going to give you the money. When have you ever heard those? When has those words ever been said? I'm a bank, and I'm not going to lend money to a super major to go find oil to cause the price to go lower. Has those words ever been said? Can anybody tell me that's been said? The answer is no, it's never been said. And so the disconnect that we are seeing, to me, is real. And it's something, we haven't even seen it yet. That's the worst part about it.
Yeah, I don't think it is the imminent impact for the markets, although I do think the capex shortage is starting to play as a support for the market. Let's get the survey result and give Omar the last word. A big overpowering yes, no concerns, nothing to look at here. OPEC plus. I think that's perhaps a little bit short-sighted myself, because I think doesn't quite grasp a full-scale war in Ukraine is a very serious event. It changes the world, and everything, I think, gets hit from it. Omar, you get the last word. No more chocolate. I won't tell Dana about all those chocolates.
So I think yes, if there is an invasion, then it gets really complicated and changes the world. But also, if Washington blows up overnight, then it's going to change the world. And if Beijing blows up, changes the world. But it's unlikely to happen. So you got to look at what's, everything's possible, but some things are much more likely. There will not be.
Invasion of Ukraine is much more likely than Washington blowing up, right? Because there isn't 150,000 troops sitting on the doorstep of Washington threatening invasion.
They're sitting inside Russia. Where do you want them to sit? They're sitting inside Russia. They can't sit anywhere else, right? So this kind of thing, man, Ukraine is a failed state. They have nothing. Politics, corruption. It's a total disaster. Who would want to occupy Ukraine? For what possible reason? Why? Because they're evil and they want to, take our freedoms. Like Richard was saying, we don't have any freedoms left. They already took all our freedoms. It wasn't the Russians. It wasn't the Chinese. It was Biden. We have no
Oh
freedoms
my
left.
God, this is like so off the charts. It's anyway. I take your point that there is maybe still hope that a peace agreement can be reached on Ukraine's doorstep. Let's hope it is. But I think we've clearly numerous examples of Putin taking up chunks of Eastern Europe, whether it be in Eastern Georgia or Crimea or wherever it is, and we have to assume that this is potentially a serious event. And I suppose in that you would say the oil markets are probably leaning towards your thought, Omar, because I think if there was concern that this could be a full-scale war, we wouldn't be knocking on the door of $90 a barrel. We'd probably be knocking on the doors of 100. But let's see. It's early in the week. It's only Monday morning. Richard, thank you very much. Really appreciate. Happy New Year.
Thank you,
Neil,
John.
same to you. Happy New Year to Paris. Richard in San
Right,
Diego.
Richard.
And Omar in wherever you are, Chocolate Land. Thank you so much. We'll catch
See you
up
guys.
with you during the week every morning, 10:30 UAE time. All the best. Have a good day.